Greetings everyone, Joseph James here, schooloftrade.com, April 16th, 2010. Welcome to your live trade room recap. Before we talk about the trades we took today, guys, I want to remind you about 3 important links on our YouTube page. If you're not watching this video right now on the YouTube page, guys, head over to youtube.com/School of Trade, and you guys will see the 3 links there. One is for our track record, the second is for our 3-week trial, and the third is for our blog. And we just put a brand new video on the blog right now under the recorded webinars. The title is Candlestick Patterns. So make sure you guys check out the new video on candlestick patterns on our blog right now, and you can find that link right in the description of the video. Let's take a look here, guys. Had a pretty busy day today. 2, 4, 6, 5 total trades there. We had a loss tucked in there on crude. We'll talk about that in a second as well. But as you can see, really good week here. Okay, besides that high-risk wave loss there on Thursday, right? Did pretty well here. 86 ticks today, 860 USD. That brings our weekly total here to 2380, monthly total to 5550, and we're now broke over $30,000 here in just almost within the first quarter here. So $30,000 halfway through the month of April, and of course we'll keep you guys posted the rest of the month. Let's see, what's the most important thing that happened today? Well, today was a Friday, so of course on Fridays we expect the morning to come to a close a little bit earlier. It was tax week this week. Yesterday was tax day. End of the first quarter was before that, so we really kind of waiting to see when this market's going to kind of turn that corner there. We saw a glimpse of it today here towards the end of the morning, where people were kind of trading more along the lines we were a couple weeks ago. But for the most part, though, we really didn't know what to expect. Now, price action looked pretty good early this morning. We'll show you guys the trades we took earlier on today, a little bit later on this video. But then, of course, we had this big shakeup in the market this morning because, of course, the Goldman Sachs news. Now, whether or not you guys are following this or not, but the SEC filed, I guess, fraud charges today, a lawsuit today against Goldman Sachs regarding those subprime mortgage delinquencies. Obviously, we'll talk more about that another time, another video, but that really shook the whole thing up here today at 11 o'clock. So we were already done almost for the day. We know at 11 o'clock on a Friday, we know it's a great time to give back some money, right? So when the market started getting really wild out there, we had already pretty much convinced ourselves, we're probably going to sit on our hands now because we already had 80 some odd ticks in our pocket. Didn't make any sense to give back the money. So we already made our money at this point. We moved to SIM accounts, most of us, to protect our capital. And of course, we also, to prep for the day ahead, we want to make sure we look at the first day, the first move of the day here. Let's take a look at the first move here. Before we do that, though, the dollar index, guys. As you guys can see, we always look at the dollar index first. First thing we look at each morning, the dollar. The dollar will tell us a story for the day ahead of us. It's going to give us some direction. You can see here, this is the DX 610 contract. You'll notice these blue lines. Blue lines are double tops and double bottoms that we marked up previously. You've got the 81 level here, as you can see, at the highs here. Now you'll notice there's a circle in the middle here. This is at 11 o'clock when we saw that news breakout. Now for the most part today, we had to kind of back and forth watch the dollar here because we didn't want to get trading the dollar when we saw the price action testing the highs or lows here. As you guys know, the dollar index, one of the times we want to be very careful trading is when the dollar index is trading into a double top or a double bottom. So around this 88.30 level here, right in the center of your chart, we were consistently either trying to break out to the upside or coming back down to the inside or trying to break out to the upside. So we kept having to worry about that 88.30 level there today. And so, of course, we place a lot of emphasis on watching the dollar. When the dollar is sideways, the dollar is choppy, we expect the rest of the markets to be sideways and choppy. But that was pretty much the only thing we had to be concerned about today in the dollar was just around those extremes there. Of course, it did begin to break to the upside and to the downside, and when it got away from that 88.30 level, we actually got some pretty good price action today. Let's take a look at the first move of the day. As you guys know, the first move of the day will oftentimes kind of set the tone for the day. If we take the first move of the day and it's a very lackluster move, it just kind of curls over and dies, then we expect the rest of the market to be relatively similar to that. So the first move of the day, always very important. We really focus in on what was the reaction for the market? What was the feedback the market gave us for the first move of the day? That's going to tell us a lot about what to expect the rest of the morning here. Now here on the gold was the first trade of the day. We didn't get another trade on gold the rest of the morning here. This is the only trade on the GC contract. We had the short-term trend being down. We can tell by the slope of my trigger line here. You have the low of day here, guys, in blue. This dotted blue line here, that's your low of day. Right, the low of day there, just about 46.9. Now, as you guys know, we can short the low of day here, but we need to see what? Got to see green pace of a tape. Right, that means fast price action. Need to see this market really moving quickly to break through those lows. Now, gold this morning didn't have very much green pace of a tape. It was mostly red. So the red pace of a tape tells us slower price action, which means we're probably not going to see the lows broken. We're probably going to see these lows hold. So, of course, here at 919, we bounce off this low. We make our swing high here, 48s, and we take a break above that swing high for your two-step pattern long. It's a reversal pattern off the lows. 48.2 was the fill, couple ticks above that swing high. We got, in this case, we managed our trade. Now, we had red pace of the tape here, guys. Remember that? We had red pace of a tape at the beginning of the day here on the gold. So we had to use the mechanical or the discretionary approach. Well, red pace of tape, slow price action. We're going to exit our trades with our own discretion. We're going to look for the MACD, the momentum indicator, the pace of a tape indicator, all to line up to tell us when to get out of this trade when we're managing our position. So we had red pace of a tape. Our first target at +4 got filled at +5. We moved our stop up to our point of entry, +1 tick. We got filled at our +8 target, our second target, and then we began the process of managing that final portion of the trade. So we had one lot left of that 4-contract trade, and we were managing the trade based upon, again, the MACD, the momentum, and the pace of a tape. We already had the red pace of a tape, and that told us that we shouldn't be using the mechanical approach. So we started off with red pace of a tape, so we knew right away, as soon as we saw the MACD and the momentum indicator curl, we knew to get that trade. We followed those rules explicitly, and we locked in 10 more ticks. You can see here, guys. That really adds a lot to the bounty, right? +5, +8, +10 is a lot different than +5, +8. So we got 28 ticks there, guys. 280 USD on the first move of the day. And this really, like I said, set the tone for the rest of the morning here,